You're thinking about buying a home in Utah. Maybe you've been scrolling on Zillow for months. Maybe you just feel like you're ready. But before you do anything, before you call a lender, before you go to an open house, there are 10 things you need to understand. Not just 10 vague tips, 10 specific, honest answers to the questions every first-time buyer has, but doesn't always know how to ask. I'm Jared with the JJP Real Estate team at KW Westfield. We serve buyers all over Utah, and we specialize in exactly this, helping people who've never done this before get it right the first time. So let's dive in. First question most people have, what credit score do I need and how much do I need saved up? Here's the honest answer. Most lenders want to see at least a 620 credit score to get you into a home. But here's what matters more than just qualifying. The higher your score, the better your interest rate. And over a 30-year loan, even a small difference in your rate means thousands of dollars. So if your score needs work, it's worth spending a few months improving it before you jump in. For the down payment, this is where a lot of people are surprised. You don't need 20% down. Some loans let you put down as little as 3 to 3.5%. On a $400,000 home, that's $12,000 to $14,000. And there are programs that can help you cover that. More on that later. Utah actually has some of the best homebuyer programs in the country. Most first-time buyers don't even know about them. The biggest one is through Utah Housing Corporation, UHC. They can help cover your down payment if you don't have it saved up yet. That alone is a game changer for a lot of people. Beyond that, here are the main loan types. You have FHA loans, which are backed by the government. They are great if your credit score isn't perfect. VA loans for veterans and active duty military. One of the biggest benefits is that you can buy with a 0% down payment. I work with a lot of veterans who don't realize that benefit is just sitting there and waiting for them. There's USDA loans for buyers looking in smaller towns and rural areas, are also often 0% down. Your lender will help you figure out which one fits your situation. Just know that options exist, and most first-time buyers qualify for at least something. Here's one that trips people up. The difference between pre-qualification and pre-approval, and why that matters a lot. Pre-qualification is basically a quick estimate. A lender asks you a few questions, runs some rough numbers, and gives you a ballpark figure. It takes maybe 10 to 15 minutes. It's a good starting point, but it doesn't carry much weight with the sellers. Pre-approval is the real thing. The lender actually digs into your income and your credit history and your bank statements and gives you a written commitment for a specific loan amount. Now that piece of paper is what sellers take seriously. In a competitive market, walking in with just a pre-qual instead of pre-approvals is kind of like showing up to a job interview without a resume. Before you start making offers on homes, you want a pre-approval letter in hand, hands down. What can you actually afford? Okay, this is where I want to give you the real talk, not just a number. A common rule of thumb is that your total monthly housing payment should be no more than 28 to 30% of what you bring home every month. But, and this is important, your mortgage payment is not your only housing cost. On top of your mortgage, you're paying property taxes, homeowners insurance, and possibly HOA fees. Those expenses can add hundreds of dollars to your total monthly payment. The number you see advertised is usually just principal and interest. Your actual payment will likely be higher. So when you're figuring out what you can afford, you need the full picture, not just the sticker price. Closing costs are something that a lot of buyers forget to budget for, and it catches them off guard. These are the fees that get paid when you finalize the purchase of your home. Things like loan origination fees, title insurance, appraisal fees, the paperwork that makes everything official. In Utah, closing costs typically run about 2 to 3% of the home's purchase price. On a $400,000 home, that could be another $8,000 to $12,000 that you would need ready on closing day on top of your down payment. The good news, especially now in 2026, you can negotiate with the seller to cover some or all of your closing costs, depending on the market and the situation. But it's always worth asking. The worst thing that they can say is no. Do you need a real estate agent? Short answer, obviously I'm biased. Yes. Here's a part most buyers don't realize. As a buyer working with a real estate agent, it doesn't cost you a thing. The seller typically pays the agent's fee as part of the transaction that we negotiate in your offer. You get professional representation, somebody that knows the market that you're working to buy in, and helps you write a strong offer and negotiates on your behalf and walks you through all of the paperwork, all at no direct cost to you. Going through the home buying process alone, especially for the first time, like trying to do your own surgery because you watched a YouTube video. Earnest money and contingencies. When you make an offer on a home, two things protect your earnest money. Earnest money is a deposit you put down with your offer to show the seller that you are serious. Typically, that can be 1 to 2% of the purchase price. If everything goes through, then it would go toward the purchase of the home. But if something goes wrong and you need to back out, what happens to that money depends on your contingencies. Contingencies are the safety nets built into your contract. The two most important ones are your inspection contingency, which lets you walk away if the inspection turns up any serious problems, and your financing contingency, which protects you if your loan falls through. Never skip these. I know in a hot market, people feel pressure to write clean offers with no contingencies, but removing your protection is how people end up in real financial trouble. Know what you're agreeing to before you sign anything. And if you have a good agent on your side, they'll be there to help you understand exactly what it is you're signing. Get the home inspection every time, no exceptions. A professional inspector walks the entire property and looks for things you can't see. Roof issues, electrical problems, plumbing, foundation, the HVAC system. An inspection runs a few $100s. The problems it catches could cost you tens of thousands if you skip it and find out after you've moved in. I have never had a buyer regret getting an inspection. I have had buyers regret skipping one. Utah property taxes. Utah's property taxes are actually pretty low compared to most states. On a typical Utah home, you're looking at somewhere between $1,500 to $3,000 a year, depending on the county and the home's value. Here is how it works. Most people pay their property taxes as part of their monthly mortgage payment. Your lender collects a portion each month and holds it in an escrow account, then pays the tax bill when it comes due. So you're not writing a big check once a year. It's already built into your payment. Just make sure when you're budgeting, you're using the full PITI number, principal, interest, taxes, and insurance, not just P&I, principal plus interest. The last one, and this is the one most first-time buyers completely underestimate. Once you own a home, you are responsible for everything. The landlord isn't coming. When the water heater breaks, it's on you. When the fence falls over, that's your fence. A solid rule of thumb is to budget about 1% of your home's value per year for maintenance and repairs. On our example home of $400,000, that'd be about $4,000 a year, or roughly $333 a month. Some years you'll spend less, some years you'll spend more. But having that cushion means that you're never caught off guard. On top of that, don't forget utilities, lawn care, and homeowner's insurance. These add up faster than most first-time buyers expect, especially coming from renting. That's the 10 things I want every first-time Utah buyer to understand before they start the process. This stuff isn't complicated, but no one lays it out this plainly. That's kind of why I make these videos. If you're thinking about buying in Utah and you want to walk through your situation, just reach out. The link down below. And if this was helpful, please share it with somebody who's thinking about buying a home in Utah. It might save them a big headache. I'm Jared with JJP Real Estate, turning hopes into homes. We'll see you on the next one.